our next guest is Julia Groves, Chair, UK Crowdfunding Association. Good evening.
Good evening.
Have you done this before?
I have once or twice,
Well,
yes.
well done you. You seem very confident, so this should be a breeze.
I'm just kind of enthusiastic, that's all.
Well, that's a very healthy way to live your life. Right, I've got some questions here.
Go for it.
I'm just gonna fire away.
Absolutely.
What is the UK Crowdfunding Association and what do you do there?
Oh, we are 45 crowdfunding platforms in the UK, all regulated, and we're trying to make as
By
many...
the FCA?
Regulated by the FCA,
Okay.
and trying to help as many businesses as possible be aware of this as an alternative means of raising money, and make sure investors are aware that even with a smaller amount of investment, they can get access to these deals.
So it's crowdfunding for everybody?
It's very diverse. You can really choose the level of risk you want to take with your money. You can do lending to established businesses, or you can have something of a punt on a couple of boys in Shoreditch with a beard. It's totally up to you what level of risk you want to take.
So what's the difference between donations and investments?
Well, there's really three kinds of crowdfunding. We call them rewards, equity and debt. Rewards-based crowdfunding is where there's a project or a product which is brand new and somebody really wants to make it. And there are enough people out there who want it so much that they will pay in full up front for that product to come to market, which sounds like music to the ears of small businesses. Very few companies really have something that attractive.
Yeah.
The much more dominant form would be loans-based crowdfunding to existing businesses who've got revenues, fairly mature, or equity investment, which is kind of like a mini angel.
So is crowdfunding specifically aimed at people who want to get shares in a startup situation?
Yeah, I mean, it can only be crowdfunding if it's either a person who is investing or a person who's receiving the funds. That's why it's called sort of peer-to-peer lending in other
Right.
ways.
Okay, so very simply, early stage renewable energy. Is that a bit of a tricky area?
Well, again, it's about what stage you want to get in. I think if you're going to start looking at a bunch of farmers with a wide open field, that would be a fairly high risk point to make an investment. But if there's already a solar farm or a wind turbine installed that's been there for a period of time, and you decide to lend money to that business so they can then go on and build the next
Yeah.
site, that would be much lower risk. But then it's lower return.
Yeah, understood on that. So in terms of the early stage renewable energy business, how many are there?
Well, there are about 6 platforms overall that do it.
really?
And there's more than 50 million's been raised so far. And it tends to be people who are thinking this is something you might do as part of their SIP,
Yeah.
as part of their portfolio of investments,
Yeah.
lower risk, longer term returns. They're generating somewhere between 5 and 7%.
So they
a
are
year.
profitable?
Absolutely.
Wow, didn't know that.
Yeah, yeah.
So what are they getting lost behind tech startups?
Well, I think what's really interesting about the tech startup scene is that, yes, it's about raising the money, but anybody who's an entrepreneur in an earlier stage business will tell you that it's also about network, it's about distribution, it's about
Yep.
partnerships. And the opportunity, if you choose to crowdfund your business, is that, yes, you'll get the financial backing, but you also get the backing of the crowd. You get quite a strong advocacy base. My first equity crowdfund I did was Escape the City. I put 200 quid in way back when, and now because I own 0.0004%.
The city, what was that all about?
It's a recruitment website to help bankers get out of the city and do something a little bit more
Did it
worthwhile instead.
succeed?
Massively succeeded.
Did it really?
And because anyone who is invested in it feels like they're aligned with the business, that's the site I use for my recruiting. So it's about customers being investors at the same time.
But is the dream to escape from the city? I question that.
Unbelievably it is for
I don't
some
believe
people.
that.
They've literally had enough. There's a huge move away from it because I think you can acquire a lot of skills and some people make a really decent chunk of money and then decide they want to do something a little bit more worthy, purposeful, creative.
But they've made their money in the city, they've taken
and
it.
then they want to
go.
escape.
So it's not as if they haven't made the money, use the city, and then run off.
So they should rename it Use the City.
That's much better. I would actually invest in that in a funny sort of way.
But I mean, you know, and if you're a more sophisticated investor, if you're a VC coming in at a later stage, it's quite nice to have that proof of concept. You go, okay, off you go. You go and raise your first 100,000. Let's see how much noise you can make. Can you generate PR? Can you get the deals? And what we find is that early money really helps people get off the ground because they get this little network of, you know, mini dragons, if you want to call them that.
But that early money, there's so many opportunities out there. How do I differentiate between A, B, C down to Z?
Yeah, I mean, absolutely is a question of investors, you know, choosing the areas where they feel confident that they can assess risk. And what's good, I think, about the crowdfunding sites, Seedrs and Crowdcube and Crowdbank and others, is in very simple terms they can try and set out what the business is and how it works. And it always starts with a video. So you begin with that, and then you delve down and down through your due diligence as you get more interested.
But in terms of the due diligence, you haven't got management accounts, you haven't got a track record, you're buying the person.
Yes, we are always, because we're regulated, you've got to be very conscious that you shouldn't be using past performance as any indication of future performance in any case. And yes, with the earlier stage businesses, it is the case there's not much data there to go on. What we've seen over the last 3 years, though, is that the average amount raised has gone from 150k to over 500,000.
Right.
And the profile of companies that are using equity crowdfunding is changing quite quickly. You know, we think maybe 2016 is the year where we'll put the P back in IPO. You know, it's supposed to be an initial public offering, not an initial institutional offering. And with the cost of AIM being so high, this can be a fairly cost-effective way to raise capital.
Do you think AIM was successful?
Am I allowed to say?
You can say what you like.
Can I do facial expression?
To be fair, the London Stock Exchange would
Yeah,
from the rooftops.
yeah. I mean,
20 years up and running.
Yeah,
750,000 people.
From my perspective, it's just been so daunting. I mean, the amount of time and the amount of money it takes to get listed is huge. And as equity crowdfunding comes of age and the more mature businesses come online, there's many, many multi-million-pound deals now.
Yep.
If you can raise capital that way and actually connect with your customer base at the same time, I would argue that's a more efficient way to raise money.
But if I'm listed on AIM,
Yes.
I've got a two-way price. I can get out.
Yes,
You
yes.
can't do it with this.
No, it's a very interesting point. I mean, I think the liquidity will be a really key factor for when the market takes off. And a lot of the platforms have got very nascent sort of secondary markets.
Well,
Fairly
are there secondary
ones.
markets and crowdfunding?
It's like an eBay. It's basically, the point is that it's a security that you can sell, but the platform won't necessarily find you the buyer, nor will they set the price.
Okay, so it's not a two-way price.
No, not at all.
So that's, for me, the advantage of AIM. Having said that, the spreads from market makers are too wide. Give me 3 bullet points to wrap up, okay? Just tell me why I should risk my hard-earned money in these situations.
Well, I think for a lot of people, they've worked in an industry for a long time and have got a lot of expertise in that sector and are keen to actually apply what they know and who they know to make more discerning investment decisions. So you can invest in what you know. A lot of the businesses will have a wider benefit and purpose rather than just a return for the investor. So if you've got a little bit of social motivation or environmental, in my case, you can put your money and make a profit and make a difference. And I think it's actually a great way for people who are maybe less experienced or less confident investors to take a very small amount of money and learn on the job, you know, learn through the experience of doing it.
Okay, so my last question there, when my dad was alive, he always said, never ever mix business with pleasure, okay? And the crowdfunding, the first funding is from your friends and family. Is that a good idea, mixing?
Well, there's a very, very small amount of friends and family, and I think that's what we call social proof. So if you launch a new crowdfunding campaign to raise money for your business and not even your mum will put in 50 quid, that's a worrying sign for investors. So we would recommend
But you don't know what my mum's worth. So that might be all she's got.
It could indeed, and that's why it's regulated, and that's why you can only put in 10% of all your assets you've got left after your mortgage and your pension, your life insurance.
Says who?
There is a cap.
That's the guideline,
Says the
isn't it?
No, that is the Financial Conduct Authority. That is the rule. That is the rule. And you also have to pass a test, simple as it is, that you understand the key aspects of what you're doing, and that tends to be exactly your points. There isn't a lot of liquidity. You've got to assume this money's going to be there for a while, and you may or may not get your capital back. And what we're trying to say is, look, we want people to understand the risk they're taking. It's not for everyone the early stage investment, but there are much more mature businesses now choosing to raise the money this way. Take as much risk as you want.
Okay, we've run out of time. That's Julia Groves, Chair, UK Crowdfunding Association.
Nice to meet you.
Thank you very much indeed.
Very welcome.